Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what is happening to our dear Tesla and what we can expect moving forward. As usual, if you enjoyed the video, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is of course live. If you're interested, the link is down below. You can join $2.99 a month where I share intraday thoughts on Tesla live throughout the day as the stock is moving, giving you updates on charts, options flow and things like that. Pretty much, yeah, as it's happening and overall my thoughts. So if you're interested, link is below. But the market's closing in just about a minute or so. So let's jump into it. Tesla looking like it'll be closing down almost 3% on the day, putting us at just shy of $233 per share, which of course, compared to the market, is a bit of an underperformance with QQQ and SPY down just over a percentage point, right? So definitely a bit of an underperformance for our dear Tesla, but sometimes that's just how the cookie crumbles. Now, let's go into the 65-minute chart first. And this is what I've been talking about. Pretty much I'll be reiterating what I've been telling my members throughout the whole day now in this video, right? Again, they get it pretty much as it's happening and sometimes even before it happens as I give my predictions. But pretty much what I talked about even down here was saying how, pretty much we need a bounce right now. This can turn really bad really soon. As you can see, this is a picture of Tesla breaking below, right? And this was this candle, obviously, right here, this massive red candle, right? As it started breaking below, I talked about how, it needs to get recaptured as soon as possible. And then not only do we actually close a candle, which I did post right here, but I also talked about how this next green candle, which was this one, was essentially it coming up to retest the breakdown, right? As usual, I always say, whenever you get a breakdown or a breakout, it's pretty common, not always, but pretty often that you get a retest of that breakout or breakdown, right? Break to the upside or to the downside. In this case, to the downside, right? And that's exactly what happened. We had this massive red candle. It did close, unfortunately, below, right? As opposed to this, where it opened below, but it didn't close below. That was the important factor, right? In this case, we actually got the opposite almost, right? Where we opened inside, but we closed below. That shows weakness to me. That shows the bulls really aren't stepping in anymore where they need to, or the bears are just overwhelming, right? Or whatever the case may be. And then, of course, we get this candle to retest it. You can see in this case, the retest was successful. We got rejected. And then we, of course, continued down even lower. Just pretty basic textbook, like flips of support to resistance, right? In this case. So that's kind of what happened. And of course, we did go a little bit lower. And ultimately, we were about almost now like $2.50 away from my ultimate massive range of my price target that I've been talking about for a long time. I'm sure people that have been watching the channel for a long time remember me pretty much talking about, where is all my stuff? I don't know why it's not loading. I might have to reload this quickly. Give me 1 second. Make sure it's loading. Sometimes it's transpiler lags a little bit, so let's see if it decides to hopefully not lag anymore. Right now it's kind of lagging. Here we go. Right, where I was talking about this 220-ish level. Ever since we were like all the way up in the 280s or almost, right? Or 270s or pretty much all the way up here, right? I've been talking about the 220s and now we're pretty much there. Like we're literally just a couple dollars away. Not too much, right? I am still continuing to very slowly buy this dip because I don't know for sure it'll get into exactly 220s. Where exactly in the 220s? Maybe it's 227, maybe it's 225, maybe it's 223, right? Or maybe we even go down to my second major price target, which will be the two kind of, 10s roughly, right? 212, 213, right? No one knows for sure exactly to the decimal, to the dollar, to the cents where it's going to be the bottom or the place that we get the bounce, which is why I'm slowly nibbling. But that's kind of the price range, in my opinion, the buy range, right? Pretty much the 220s all the way as low as the 210s, potentially even 200, right? And again, we talked about this many times because it's sometimes as simple as taking the Fibonacci, going from this potential swing low. It doesn't really matter which one. We're just going for a rough idea as to where the bottom could be. Not exactly like the perfect pinpoint, like absolute decimal or percentage points or like to the cent bottom, right? But in this case, as you can see, the 0.5 level is putting us around $226 here. And if I go over here, it's putting us at around 232, which we're pretty much at right now. So, which is why I started nibbling here once again, because again, this could be the bottom. This could be where we bounce. We could go into the 225s roughly, right? Which is where this is. Or we could go even lower, which I talked about on the weekly many, many times, which of course is going to be this situation right here, which will be essentially a retest in the bottom of this channel one more time of this breakout, which will pretty much put us around $210 per share, right? Who knows for sure where that bottom is, right? No one knows for sure, and I'm not going to be trying to guess it, which is why I'm nibbling. Now, looking at the weekly, actually, speaking of which, very quickly, one thing that's not super ideal is the fact that the MACD is looking like it's potentially looking like it wants to cross. It hasn't, and there's a potential that actually just bounces from here. But keep that in mind. It's looking like it's not that far away from flipping bearish on the weekly, which if that happens, I think like 210, maybe 200 probably will happen, right? And of course, the bars you can see are about to go red, which isn't the most ideal situation we've ever really seen. That's not what we want to see. The order blocks from the weekly chart, you can see it doesn't really start up until the mid 100s, which not impossible, but would be pretty disappointing to see. So keep in mind, one thing I did talk about, which was my super bearish take, by the way, which I mentioned a while ago, but I'll kind of revisit it one more time. This is like pretty bearish. And this would be the fact that this is nothing more than a simple massive bear flag, right? From this all-time high here, you can see, right? Assuming we just had a massive fall. I mean, not assuming, we literally had this massive fall. This was the fall right here. This is the pole. And this, of course, is the bear flag itself, which actually coincides decently well with the Fibonacci, unfortunately. If you go from the Fib, from this massive high, all-time high really, to this low right here, you can see we did get rejected at the 0.618 level, right? Just shy of 300. So in theory, and again, this is pretty bearish. I don't think it'll happen, but it's not something you want to completely ignore, is that this is just a massive bear flag right here that we're playing out. And at the moment, we're pretty much, it's not looking too great, right? Because if we do break below like 200 roughly, in my opinion, that's where like it really gets bad. If we break below 200 or like 205, 200, something like that roughly, things can get extremely ugly, extremely fast. And yeah, it's going to hurt. Let's just say that. It's going to really, 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 really sting. And I think there's a very real possibility we at the very least come back down to the mid 100s, if not even probably 100 again, right? It's not exceptionally like impossible, right? I don't think it's a high percentage point. I'm giving it like maybe a 15% chance of happening, but it's not something you want to ignore, because again, this could just be one massive bear flag. Now, on the flip side though, if you go over to the monthly, you can see the MACD, it did flip bearish all the way up somewhere around this level over here. However, as we kept going down, the MACD is actually on the monthly has started to flip a little bit slightly more bullish looking, right? The red candles you can see at the bottom here are getting smaller. The MACD is getting close to a flip as well. We'll need a nice little bounce here on the monthly chart to get an actual flip of the MACD where the green crosses the red line you can see right here at the bottom. But it's not impossible, right? But we do need a bounce somewhat soon, right? There's, again, it's a monthly time frame. It takes a while. It could still take a couple months for it to actually happen, or the bounce to really start taking like, I don't know, actually like really happening meaningfully, I guess. But if it were to happen, I think this is going to be really, really bullish. I think this monthly chart will flip bullish, and I think this will be beautiful, like I said, towards the year end and then potentially into 2024. Right now, going back to the daily, right? Ultimately, that's kind of what I'm seeing right now, right? Even if we do get a bounce from here, again, like I said, there's still a lot of resistances above us right now. But on the flip side, there's also supports now, right? 230 is a potential level of support. We had a bit of support here, but more importantly, we had more support somewhere around here. There's kind of 230 all the way down to pretty much 220. A lot of support, a lot of trading and whatnot happening in this area. We also talked about, of course, the volume by price, how, if we break below 240, there's a decent chance that, we're going to slide right through pretty much down. Actually, let's do 65-minute charts a little bit better. Actually, no, what's the daily? Why does the daily look different now? I swear this looked... last time I was talking about it, I swear it looked a lot different. The volume, did it change? Because I remember the bar actually started getting larger around the 220s. But I guess this is a little bit lower now. But nonetheless, the point is the fact that, if we, like I said, if we do break below 240s, right, the volume gets much thinner anyways. And that it doesn't really start getting a little bit thicker, or at least, more volume really up until pretty much, I guess, the low 220s really, right? And especially the teens and closer to 200 itself, like 210, you can see is where the bar really starts getting much bigger, and especially below 200. But if we break below 200, that's when this weekly time frame gets really, really ugly, and we start falling underneath this overall ascending channel. And if we do that, that's not good. Let's just say that would be exceptionally bad. Now, closing this out, as you can see here, right? So the ultimate thing I'm looking for right now is going to be a bounce pretty soon, right? Again, I think there's still potential for a little bit lower. I still think we can easily get into the 220s, maybe even gap fill this 220 gap right over here. Absolutely a possibility. The RSI is looking a little bit weaker now, right? This fall that we had recently is definitely kind of, ruining that bullish divergence we had. It's still technically there, but it's really not looking as convincing as it did back when we were still inside this wedge, which is why I personally think there's overall still a little bit more weakness for Tesla, unfortunately. And it wouldn't surprise me to revisit the 220s itself, potentially even the 2 teens, like 210, 15, 16, something like that, anywhere in that general range. I did want to also look at the options flow. I forgot to look at it the other day. So let's quickly revisit that once again. I did share with my members this morning, but I'll share with you guys, of course, as well. And you can see, as long as we, put the premium up to about 50,000, so at least it's something relatively meaningful, right? All the way up to, all the way to the max, which is almost 2 million. Now, the point we're looking at here is the fact that there is, there's quite a lot. There's a lot of red bubbles. What does that mean? Well, it pretty much means the following. So from left to right, it's pretty much, left is much closer of a date. So it's like, for instance, this is July, or well, not really July, but like August right here. You can see, right, these are all August, September, October, right? And of course, the more to the right you go, the longer the time frame, right? For instance, all the way here is pretty much April 2026, right? So that's kind of what that means, right? That axis. And the y-axis is essentially the strikes. And of course, the circles themselves mean whether it's a bullish or bearish position, right? Naturally, red is bearish, green is bullish. And you can see a lot more bearish than bullish positions, a lot more red circles, and some pretty sizable like the red circles. The bigger the red circle actually is, the more premium is within that. So the more of a larger bet that is being placed on a further downside move. So you can see a lot of short-ish term bets over here, with longer term bets, even all the way out to the year 2025, where we have a decent amount of 1.6 million in premium, 1.7 million in premium of bets to the downside. Could be hedges, could be just plays that the people entered that were just, safe bets to the downside that, maybe they'll take profit as we enter maybe the 220s, 210s, even the 200s, low 200s. Who knows for sure? But the point is that there's a lot of bearishness. There's a lot of bearish flow right now, and a lot of people are betting on Tesla to go even lower. I talked about QQQ, of course, right on the daily, how it's, breaking below this ascending wedge, which isn't great, and we're kind of falling below, and we retested it so far, not super convincing, and potentially go even lower, which is again something that seems to be potentially happening here, which of course is not good for Tesla. And that's kind of the overall stuff that I am personally looking at right now. Now, with that being said, we also have the 100-day moving average, which is really not that far below. It's pretty much sitting at 220 right now, and it wouldn't shock me if we get there. It really would not surprise me if that's where we go, but that's where we potentially bounce as well. And the final thing I want to take a look at as well, ladies and gentlemen, is going to be the following, right? We have the RSI on the daily looking pretty bad, still making lower lows, still looking pretty hideous, not making any signs of a bullish divergence. And until it really starts doing that, or at least until it starts entering oversold territory, in my opinion, the move to the downside probably is not over just yet. But again, I don't know exactly where it'll stop. The point is the fact that I still think there's a bit more room lower, but I don't think it should be too much lower. But yeah, that's kind of what I'm seeing. So let me know what you think down below, ladies and gentlemen. But thank you so much for watching. If you enjoyed, don't forget to hit that like button, and I'll see you for the next one. Peace.